So in terms of my own personal trading, I ended up going 2 for 2 on the day, a 100% success rate buying SPY and SPX call options during the FOMC. Within the chat, when we were in the 564 range, I did end up calling out the move that we would go to 568 and to be buying the dips. Using the break and retest strategy, I ended up buying the dip towards the exact lows. We had many members be self-sufficient and also take advantage of that overall dip buying opportunity. Also ended up scalping SPX call options for a 50% return within 3 minutes. So in terms of the overall week, we are at a make or break key critical level. And in terms of tomorrow is going to be the day that defines if it's going to be an overall bullish or bearish closing week. Based off of the daily chart pattern, we are more likely to be setting up for a strong bullish closing week. We are now back at the upper resistance on the overall SPY, forming higher support. I'm going to be explaining to you what needs to happen in terms of the week to close bearish, in terms of the week to close bullish, what to look for based off the daily chart pattern. The SPY is setting up overall bullish, especially if we open up with a gap up. And there's going to be opportunities to be buying call options at key critical oversold levels that I'm going to be giving you, also along with break and retest levels that are not at the upper resistance levels. And I'm also going to be explaining to you key levels of interest that have not been tested with unique trading strategies that I've created, such as the gap close reversal trading strategy, where I'm interested in buying put options, scalping against the overall trend, even if the SPY ends up having a strong bullish closing week. I'm going to explain to you how to identify if we are going to be closing bullish or bearish into this week, the best levels to be trading at, what to look for. This is going to prepare you to trade the best setups at the best prices. If you are serious about making money, make sure that you use these levels with the confirmations that I've been teaching you on the 10-day, 30-minute chart. You'll be printing money at the speed of light. Let's get straight into the analysis. So in terms of tonight, this is going to be a more shorter video. Now, with that being said, I'm going to be starting off with the overall daily chart pattern, right? So in terms of the daily chart pattern, it is leaning for a bullish closing week. So this is the pattern, right? As you can see right here on the SPY, you have previous resistance. Where is the previous resistance? The previous resistance was at 559, and you also had some resistance right here at 564. If you watched last night's video until the end, I made it very, very clear. If there is a break above 564, drop back down to retest, reacts to support, it's going to be bullish and go back up to the 568s for an overall bullish trend day. That's why in terms of FOMC, when we saw a clear break above that overall level, the level was, as you can see right here, very, very clear. It was the 563 to 564 range. If you watched last night's video, we were looking for a clean break above 564. As you can see, we had a clear breakout above 564. It went to 565.50. Then we had a green, red, green higher support form above the bullish break and retest level, right? And then all of this strong support forming. Therefore, it's going to go bullish as long as we're maintaining above that 564, right? And if you looked at the 1 minute chart, the 1 minute chart had pointed out that there was a strong opportunity to be buying calls using the break and retest because we've been holding 564 the whole day, breaking above it, green, red, green 30-minute chart pattern, and there was clear resistance right here at 563.50. And then we had a massive breakout overreaction to the upside, 1.5 spike instantly, drops back down to retest. And when we were sitting right here within the chat, I explained that this is going to be bullish, going to be a break and retest strategy, and the SPY is on pace to go to 568. Many people bought calls as it was dipping, and as we hit this previous resistance, using the 1 minute chart as a break and retest level, and using last night's game plan range of that 564 level, along with the continued breakouts and holding of support to 565 as the confirmation that the SPY is going to go bullish to 568. So like I said, we absolutely crushed it in terms of the FOMC. Now, in terms of the game plan, what I want you to understand is this. This is very simple, man. If you look at the pattern, we have the green, red, green. So you have this green, red, green bullish pattern. And look at where the pattern is forming. The lows of these daily candlesticks are getting higher, and the SPY is pushing higher, and we are gapping up. And during extended hours trading session, we are currently gapping up as well, right? So it's forming higher support. it's turning that previous resistance into support. It's forming the green, red, green bullish pattern, right? You can see right here, previous resistance right here was at 558, breaks out, goes to 570, drops back down to retest, forms the higher support. Now, the new higher floor on the daily chart is at that 563 to 564 break and retest zone that I gave you. Made it very, very clear. As long as we're holding above, break and retest, it's going to be an overall bullish day, right? So the new support is now formed higher on the daily chart. No longer at this resistance at 559. It's now towards 563 to 564, and we're pushing higher. And we have a green, red, green pattern at higher support. This is all bullish. Take a look at how the SPY has recently reacted with the same pattern. So as you can see right here, this is previous resistance on the SPY, 570, 570. You had a break, green, red, green. The floor is at the previous resistance with a green, red, green bullish pattern. When this pattern formed, the next day, as long as we're maintaining support towards the previous closing price, as long as you are seeing the previous closing price react to support, it can have a small drop. That's completely fine. As long as you are seeing the previous closing price react to support, or if the SPY is gapping up, it's going to be overall bullish heading into tomorrow. But if you see the previous closing price react to support, it's going to be the best opportunity to buy calls, right? And then you can see again, green, red, green, reacting as support, higher support, previous resistance, next day goes bullish. Now, one of the situations that I am seeing with this overall green, red, green pattern is overall, the move is going to be bullish, but what can happen is if we're having a massive gap up or if we're hitting a key critical resistance level, so if we're opening up with a massive gap up, a key critical resistance level, what could happen is it could drop first and then it could start to bottom and reverse towards the previous closing price. So what I'm telling you is in terms of call options, the best entry would be towards the previous closing price, especially if we're gapping up, which is at 567.13. Now you can see in terms of the situation, this was red, green, red, but it was also at key overall support towards 570s, gapped up, strong bullish day. So in terms of the overall situations, this is what I want you to be aware of. Again, this is another situation. This is now the second time I'm showing you this one. Resistance right here on the daily chart, green, red, green. Next day starts to go up, and then previous closing price reacted bearish at some point, starts to drop, right? Just understand, overall, it's bullish, but there's going to be opportunities for put options at key resistance levels that I'm going to give you. And there's going to be opportunities for calls towards previous closing price if we drop back down. And there's going to be opportunities for calls as well if we ended up selling off to 561. So we're seeing multiple things that can play out with the daily chart pattern. It's overall bullish, but when we hit key resistance or if we're opening up at strong resistance, it's likely going to try to drop first. That's what I want you to understand about this overall pattern, right? In terms of the weekly chart, man, to have a strong bullish closing week, the SPY must hold above this level. So in order to have a strong bullish closing week, we need to stay above 562.50. That is the level we need to stay above. In terms of to have an extremely bearish week, the SPY needs to go under 562.50, turn that into resistance. If it's maintaining resistance, then we're going to be on pace to go under 559. We go under 559, then we start to drop to low 550s. Based off the levels that we're sitting at, man, in terms of this week, we are looking at a very strong bullish closing week. So the best plays is going to be to buy call options on oversold dip buying opportunities. Now, if we are gapping up, the best level to buy calls is going to be towards the previous closing price, 567.13. Now, what is the next level to be buying calls below 567.13? So in order to find this level, what I'm going to be doing is I'm going to be looking at the 30-minute chart. So in terms of a major level below 563, it would be right here. This is where I would be interested in buying call options towards this 564 to 563.50, right? That would be the next level, about a 3 to 3.5 drop in that situation to look to buy overall call options. I'm telling you, this level right here, this 563.65, this level 563.65 to 564, very strong zone to be buying overall call options in that situation, right? In terms of an auto buy level, if we did end up selling off to 562, I would auto buy calls at 562 the first time it's tested. It would likely bounce first. You can keep an eye on the gap close reversal level at 561 as well. Now, in terms of puts, this is what I want you to be aware of in terms of puts. The true best level, especially heading into tomorrow, would be the following. So SPY ended up closing at 567.13. We're currently gapping up. So in terms of the overall two levels that I have for you in terms of puts, we have a breakdown in retest level that has not been tested. So take a look at this overall level, man. You can see right here, there was some support on the 30-minute chart, had a massive drop, spiked back up, reacted as a resistance, formed lower highs, started to sell off. The new support, which really hasn't been tested in a sense, is towards like this 572.60. This 572.60 to 573 overall like 50 zone, especially this 572.50. That's the main level. Previous support to react as a resistance, new lower highs forming, that would be the best level of interest to be buying put options. That's where I would prefer to be buying put options. That's the first level towards this mid 572 range. If you're seeing the bearish 30-minute candlestick confirmations, you can buy puts in that overall situation. The next level where I would consider auto buying puts is at the gap. There's a gap to fill above at 576 for the gap close reversal, right? Once this gap fills, it's likely going to reverse and start to crash. So the overall zone for that would be 576 to this strong resistance in the pre-market towards this 577 level, mid 577 level, right? That's the overall range for puts. Now, I'm going to give you a quick ladder. So if one of these levels on the ladder reacts as a support level and there's bullish confirmations, break and retest strategies like that, then it's going to go up to the next level, right? If one of these levels reacts as a resistance level, then it's going to drop back down to the next level. In terms of the current market, we are more on pace and more likely to have a strong bullish closing trend week because there's not much days left within the overall week. We only have 2 days left now, and we're at much higher levels where it's very unlikely that we're going to be dropping back towards those previous week lows. Therefore, the overall weekly pattern with not much time left is basically confirming that it's going to be an overall bullish trend week, and you need to be focusing on call options towards the oversold levels and towards the upper break and retest levels. So this is the main ladder that I have for you, 562.50. So let's go a little bit below that, right? So in terms of the gap, there's a gap at 561. I would look to auto buy calls at the gap. The next level is 562.50. Just understand, for the bears to take control and to have a bearish week, this needs to sell off hard. It needs to sell off now, and it needs to go under 562.50. If that cannot happen, it's going to likely close at a very strong bullish overall price into the mid 570 range, right? And there's not much time left on the clock, and we're towards upper resistance, and the pattern's overall bullish. So it's favoring the overall bulls to have a strong bullish week. So the best thing is to really just focus on calls at the oversold levels and the break and retest levels, and to focus on puts at the two key levels that I gave you that have not been tested with strong confirmations, and be aware that you need those confirmations because the overall week is going to close strong and bullish. But this is the ladder that I have for you. 561, auto buy calls, gap close reversal. 562.50, that is a key level. If that reacts as a resistance, then the SPY is going to try to react bearish. It's going to try to close the week more bearish, which is very unlikely at this overall rate, right? 562.50 is the make or break level. If the SPY is maintaining below that and forming resistance, it's overall bearish. If we are reversing out the gap and forming support at 562.50, it's overall bullish. As of now, it's overall bullish. Next level above 562.50 is going to be an oversold break and retest level at 564. 564 to 563.50. Next level above that is going to be 566. Previous resistance. This is a break and retest level where you can look to scalp calls, use strong bullish 30-minute candlestick confirmations, and then the gap. The gap at the previous closing price is a gap close reversal level, especially if we're open up with a gap up with another, break and retest level, gap close reversal situation. Now, this is the higher resistance, 570. Once we break above 570, drop back down, react to support, break and retest. This is the highest break and retest level that I would consider, right? Really not too interested in it. But once that happens, we break above 570, drop back down, react to support. The next level we go to is going to be that 572.50. 572.50 is likely going to drop first. It's a drop zone. Previous support to react as a resistance, breakdown, retest, bearish 572.50 to 573s. Now, next level above that, gap close reversal, 576, auto buy calls. Those are the levels, right? So I explained to you what to look for. And obviously, in terms of strategies and bias, I explained to you the levels where I'm interested in calls and the levels where I'm interested in puts. But at the end of the day, you have to trade price action and react accordingly. So when a level hits, you can have a strategy and you can have some sort of bias, but you have to react to the price action and the confirmations that are there. Therefore, no matter what I said in a sense, if the market is, reacting bearish at the overall level, right? So in terms of like simple strategies that I use, if one of the levels has a breakout and then we drop back down to retest and there's bullish confirmations, then the level's bullish. If one of the levels drops below and we spike back up to that previous level and it reacts as a resistance and it forms lower highs, then the level's bearish. That's what I've found to be the easiest way to confirm if a level is bullish or bearish, by just waiting for the level to break out, drop back down, retest, react to support, bullish confirmation, break and retest. And then in terms of bearish, waiting for the level to crack, and then it spikes back up, forms lower highs, reacts as a resistance, forms the bearish confirmations, the breakdown, retest. Those two strategies are what I've found to be the easiest, where if you wait for it to break out first, then react to support, then form a confirmation, then buy calls. Where you wait for it to crack support first, then spike up, form lower highs, form bearish confirmations, then buy puts. That's what I found to be the easiest, but that's not the only strategy. In terms of other tips I can give you with the overall levels, obviously, if you're seeing a floor, if you're seeing some sort of consolidation at a level, a strong floor with bullish patterns, ideally for 1 to 2 hours, then it's a bullish level. If you're seeing some sort of resistance, roof at the overall level for 1 to 2 hours with a bearish pattern, then it's going to react bearish, right? And that can happen at just a consolidation at the overall level. Just look for the pins. Bottom pins are bullish, floor. Top pins are bearish, roof. Doesn't have to break out or retest or break down and retest. So there's multiple ways to identify and confirm if level is bullish or bearish, right? I mean, it was very, very clear that the market was bullish because I told you in terms of the zone was that, 563, that 563 to 564. If we're breaking above that overall zone, dropping back down and reacting as support, that's bullish. Green, red, green, multiple breakouts, break and retest, react to support. Market was consolidating and hold above the key levels all day, is obviously bullish in that sense, right? And then you can use the break and retest strategy, not just on the 30-minute chart with the patterns as confirmation, but you can use it on the 1-minute chart. If the market's been saying that we're bullish because we're holding above all these key levels, like I'd stated, we were literally holding above these key levels. The confirmations were there. Multiple breakouts were there. If we're having an instant overreaction breakout like this within a minute from 563 to 565, and we drop back down, and in terms of where the bottom could be, at that previous resistance on the 1-minute chart, 563.50, which was in the zone of our key levels, massive breakout, drop back down to retest, is bullish. Forming higher support, green, red, green, bullish. Dropping back down here, forming higher support, green, red, green, bullish. So I trade the 1 minute and the 30-minute time frame. So those are some tips I can give you with the levels. Just understand, right? There's multiple ways to confirm if a level is bullish or bearish. There is some sort of bias and there is strategies to certain levels and there is some sort of bias to certain levels, but we react accordingly and we trade the price action. And at the end of the day, we respond accordingly and we adapt. And if that level's saying that, it's reacting bullish or bearish, then we might take the trade regardless of what the bias or what the strategy says, right? It's not just blindly trading an overall strategy and bias and levels and auto buy and stuff like that. But you do have to have an understanding of also, before you enter a trade, the most likely outcome. I'm well aware in terms of the overall market, the most likely outcome right now, but I confirm this. I don't just blindly go into this. I have the awareness to that, but I don't let that bias and overall awareness and how I come up with that awareness, just blindly bias me into a trade, right? So, I'm well aware in terms of the market. It's likely going to close bullish, and I know the levels of what to look for. I know the confirmations of what to look for. But in terms of drop zones, when these levels are first tested, since they're strategies and have not been tested, this works very well. Even though it's against the overall trend, if we close bullish, it's likely going to drop first. And I'm well aware of those levels, 572.50 to 576. And you need to be aware of that Because if I'm in fucking calls, I know where to sell because it's likely going to drop first there. And then if I want to do a scalp against the trend, right, and hit the level when it's first tested, and if a confirmation's there when it's first tested, then I know where to buy fucking puts. You know, if the overall week's going to be bullish, I'm only buying puts at key strategies that have not been tested. And a key strategy is the breakdown and retest. Breakdown hasn't retested at 572.70 and the gap close reversal at 576. So that's the overall game plan. That's how I'm planning to trade the overall market heading into tomorrow. Use this information to your advantage. Patiently wait to trade the best setups at the overall best prices, right? So in terms of today, we had many trades as a team, as a collective, as a whole. You know, we absolutely crushed it. I explained to you in terms of what I did, in terms of what Gio did. He absolutely crushed it. Many trades on the day. In terms of today, I just don't have the time to go all over that. If you want to see everything is that we're doing and fully experience everything, is the first link down below in the description. What we do is trade 0-date options. We buy cheap, low risk, far out of the money 0-date options contracts. And we're known for selling them deep in the money for the biggest percentage gains within the overall market, right? In terms of our position sizing, the most we put into our trades is our max risk per trade in a sense. So our multiple means that if the trade expires worthless and goes to zero, when we're not adding to an overall trade, then the most we lose is what we put in, which is our max risk per trade. Therefore, we can let the contracts expire worthless and go to zero because the most we lose is what we put in, and the most we put in is our multiple max risk per trade when we're not adding to a trade. One of the ways we increase our wins is by holding the trades for the biggest percentage gains, buying something that's cheap, low risk, and I'm also adding to wins. Adding to wins means we're increasing our position size, right? So when we're doubling to tripling the position size, it increases our gains like fucking crazy. Now, with that being said, the way we protect that new risk that we're adding on is by setting a profit stop. When we're green, we tend to add. When we add, we set the profit stops, right? Typically when we're up 15%, we'll set a profit stop and it protects our position from going green to red, and it protects the new risk that we're taking on by sizing in bigger, and it protects that new potential of making massive gains without being exposed to more risk because we had the profit stop set. And the trade goes against us, we're stopped out for green regardless of that new position size being added within our average cost. One small winning move in our favor with our new average cost works out 9 out of 10 times in that situation, because when we win, we tend to win big by adding to the winners, and the profit stop protects the new overall risk by not adding to those losers, right? So it's a system that we have. It's a 0-date options trading alert system. You get to trade alongside us within the stock market, right? And you gain access to our real-time 0-date option trading alert system. You gain access to our trades. You gain access to our private network and our community. So if you do want to experience it, it's the first link down below within the description. In terms of when we are down on a play, when we're down 50, 60, 70, 80, 90% on a play, right? Say it wasn't timed perfectly, 70% of the time, it tends to come back to life because we trade the trend. When you trade the trend, you don't have to time the trades perfectly. When you buy cheap, low risk, far out of the money option contracts and you put in your entire position size as the max risk per trade, you can let the contracts expire worthless and go to zero. Therefore, we don't use stop losses. And the way we're able to win big is because we make big percentage gains. We hold our trades for longer periods of time, and then we add to winners. Adding to winners, you know, if we're adding to a winner, we're not going to let the trade expire worthless and goes to zero if it goes against us, because we get profit stopped out with the new average cost regardless, right? So when we're adding to these winners, we quickly do it. When we're up small amounts, like 5, 10, 15%, we will quickly add to that winner. And one small winning move in our favor protects that overall average cost as well, which works 9 out of 10 times. And we set the profit stops. We move the profit stop up higher to ensure that we don't get back the bulk of our gains. When there's moves like this where the market just keeps on going up and we're in calls, we make the bulk of the overall move. When there's moves like this where the market just keeps on dropping and there's no spikes, we make the overall bulk of the move, moving the profit stop higher. Eventually we'll get stopped out once the market starts to reverse, right? So I wanted you to understand all of that. And like I said, man, when we're down 50, 60, 70, 80, 90% on a play, 70% of the time, the trade comes back to life, which is another reason why we don't sell and cut the plays for losses, because we're well aware 70% of the time, even if we are down 90%, the trade comes back to life. We're at the bare minimum. It's green enough for us to get profit stopped out. And we set the profit stops when we're up 15%. You don't have to put in your entire position into the profit stop. You can detach it and have a certain position, like, 70% of your position size in your profit stop. And then you can have 30% not profit stopped, aim for the bigger win, sell deeper in the money, right? And not just holding and aiming for the bigger win is going to increase your gains, but setting the profit stop and adding to the winners protects you and increases the gains as well. And when we are down 50, 60, 70, 80, 90% on a play, there are times where we buy a second strike. And when we buy that second strike, it tends to be towards the exact lows timed perfectly. So in that situation, we'll look to size in a little bit even heavier. So I'm giving you some background to the system and how you can capitalize on trading far out of the money 0-day options with us using this information. For those of you who are trading the game plans, using the curriculum that I'm teaching, you should be printing money at the speed of light. I mean, one of the best strategies that you can possibly use is the break and retest with the green, red, green pattern. It works nonstop, man. Like, look at this. We have resistance here at 563. This is a strong breakout. We drop back down to the previous resistance at 563.30. Green, red, green. You're in calls right here on the opening of this 30-minute candlestick. If it drops a little bit, you scale in slowly, right? But we rarely add to losers. The main focus is adding to winners, right? But it works, the green, red, green, right? And then this candlestick right here, this was another reason why I was bullish during the FOMC. This is a trend reversal candlestick that I taught you if you went back to the previous videos throughout the past 2 weeks. When this is at a break and retest level, this 30-minute candlestick, it has to be at a break and retest level. It doesn't have to be at a break and retest level, as long as it's reacting as supported key level as well. But the point is, this is resistance. The resistance is right here at 563. This is a breakout. This is a retest of the previous resistance. This is a green, red, green with a higher floor, 2 hours of consolidation at the previous resistance, right? So you buy call options on an opening of this, sell the rip. If you use this information, you're going to print nonstop at the levels I'm giving you. It works nonstop. It's going to keep on recurring, keep on happening. You have to be there and show up and have the awareness to use what it is I'm showing you. You're going to be print money self-sufficient at the speed of fucking light. At the end of the day though, we're going to do this best because I've created the curriculum and we have the most experience with this, man. We have over a decade of experience within this overall trading. So in terms of this 30-minute candlestick, so like I explained to you, 3 slanted red tends to be a bullish reversal pattern, especially if it's at a key break and retest level, right? And as long as we're holding above 563 to 564, market's going to be bullish. And we were already breaking above 566, so it's likely going to be super fucking bullish. It was just so obvious to be bullish during the FOMC, man. And then this right here, this is another green bullish 30-minute candlestick, right? But this trend reversal candlestick at the break and retest level, also just understanding that we were already at 566 and we've been holding above the key zone to buy calls. So it's obviously going to try to spike, but this is trend reversal. Take a look at this candle and it's at the level where it's lying, break and retest, and market was setting up bullish. We already broke out to 566 and we were holding the higher floor all fucking day. So it's likely going to react to support, right? So if you study that candle, you're going to see, here we go again. Look, this is it, man. Take a look. This is the candlestick right here. This ended up forming right here. You see it? We had 3 slanted red and then this 30-minute candlestick right here. And this was at the level where I told you to auto buy calls. If you watched the videos earlier this week, I made it very, very clear to auto buy calls at 559 to 560. This was the auto buy level, 559 to 560, the pre-market support that was not tested. If you go back and you watch the video, I said there was multiple auto buy levels, 559 to 560, auto buy calls. 555, auto buy calls. 550, auto buy calls. There was multiple auto buy levels, but you buy calls at all of the auto buy levels. So the point is, the market bottomed at the auto buy level, but look at how it bottomed. It bottomed with 3 slanted red and then this 30-minute candlestick. So you could have used this 30-minute candlestick that recently formed and bottomed at the key level at the overall zone I gave you yesterday. I told you, if we are holding above 563 to 564, the market's going to be bullish. And we were not just holding above. Before FOMC, we were maintaining above the floor for several hours, but we were breaking out. We were breaking out to 566. So if we're going to quickly drop down with this 3 slanted red pattern and then this 30-minute trend reversal candlestick right here, next 30 minutes is going to be bullish. Look at the pattern. This 30-minute candlestick right here was placed at the zone. I told you to buy calls if we're holding up, and it's already bullish because we're breaking out so fucking high to 566. This is trend reversal 30-minute. Next 30 minutes is going to be bullish. That's why we were so fucking bullish during the overall FOMC. And if you just compare that pattern with what I showed you, this 30-minute candlestick is identical. And then the next 30 minutes is bullish. It explodes up and it starts to hit the wicks. And then you could see it when this 30-minute candlestick forms right here, it explodes up, starts to hit the wicks. All reason to be bullish, right? And the 1-minute chart gave away the entry along with my zone. My zone was that mid 563 to 564, but the 1-minute chart gave it away. The 30-minute candlestick closed bullish. The 1-minute chart had an instant pump to 565. We dropped back down to previous resistance right here at 563.50, and it formed the same trend reversal candlestick where the 30-minute chart reversed twice at my key levels to buy calls this week on the 1-minute chart at the break and retest level. So I'm showing you how to view the market, because if you view it how I view it, you're going to see these same patterns repeat. Just look for patterns. You can make up your own patterns with the candlesticks. You can make up your own names for them. Just study how they react at the levels. Look for the pattern, and is it reacting as a floor or is it reacting as a roof, right? You know, this same candlestick could be bearish. If it's forming out a roof with a breakdown retest, then it's fucking bearish. If it's breaking out, dropping back down, forming a floor, then it's fucking bullish. You know, and people don't understand that with the strategies, right? They think a certain candle is just bullish or bearish or a trend reversal. It's not that simple. It has to be placed a certain way with a certain strategy, and you have to know the zones and the levels for the drop zones, the spike zones, the break and retest levels, the breakdown retest levels, the best levels I give you. At the end of the day, I give you the best levels within the market, and I show you how to open up your mind and eyes to this overall craft so you can be self-sufficient and print at the speed of light. So this is how I see the market. That's how we literally traded it today. We absolutely crushed it. Look, man, we're going to finish this week very, very strong in the green. We've been crushing it all fucking month. If you're serious about joining us, it's the first link down below within the description. I'm going to be signing off and heading back to my secure private organization.